Esteemed members, good evening to you. So, we are in the month of April, and as you're all aware, this month is a very crucial month, pleasant month mixed with examinations, holidays, and which with fresh dreams of a financial new year. Your Board of Internal Audit and Management Accounting is once again before you with another interesting topic and an equally interesting speaker and an experienced speaker. The topic of today is current trends and swift internal audit practices. Friends, it is always maintained that internal audit is one of the key areas in any organization. And internal audit is one particular activity which, being a managerial function, can act as a fraud preventer as well as a detector. As the businesses develop, as the business models develop, so are the practices of internal audit. We have here today CAK Vidyadharan, who is from Chennai, very reputed and very well-known chartered accountant in practice, especially in the areas of internal audit. He'll be formally introduced by our very energetic, a very popular, and a person who is well known across the country, Sardar Charanjot Singh Nandaji. In fact, I'm blessed to have him as vice chairman because he was holding the portfolio of chairman of this committee for a few years now. And it's so easy for me to just breeze around the committee and do whatever is happening there and also seek the help and assistance of Nandaji at all times. Nandaji, I welcome you and I thank you once again for being with us. Vidyadharan sir, I welcome you and thank you for sparing a valuable time. And Arun Agarwal from the board, thank you for being the backbone of this board at all times. So friends, I request Nandaji to give his opening remarks and introduce the speaker and start the day. Nandaji, over to you.
Thanks a lot, Mr. Arainder Kumar. I am always mesmerized by the level of indulgence you make to the institute. The top priority which I have seen for Mr. Arainder Kumar as my chairman is that he is always dedicated for the cause of profession. I have seen him work in totality. I have seen him work at odd hours. I remember when a program of GST was to be held in Gurgaon, he did not get a room. So shifted in a small, very one-star hotel and stayed the night there. So when there is immense potential and immense, you can say, intention to perform, institutions scale near heights. Our institute, the Institute of Chartered Accountants of India, all of you know, was set up an act of parliament way back on 1st July 1949. And the most important document to the democracy, the constitution, was not adopted. All of us know that the constitution to this great country was adopted on 26th January 1950. The pertinent question that arises is, what prompted the Constituent Assembly to set up an Institute of Chartered Accountants of India? Ladies and gentlemen, let me very candidly put across that the Institute is today scaling newer heights because of people like Mr. Rajendra Kumar. They have spent their entire life putting their best. They have been spending and putting lot to ensure that things move in the right direction. Now coming on to the topic of today, internal audit. Internal audit essentially is a management function. All word internal audit now is a sunrise industry. The reason, it is not a post-mortem. It is bringing out what the boards want. We are answerable to the board or the audit committee. Whatever information we give to the board, whatever risk appetite would determine, because risk is appetite is ultimately the foray of the management. But how much risk has to be taken care of is taken by us. We take care of all facets, the processes. Brother Rajendra Kumar very rightly said that when the processes starts becoming weak. That is essentially the breeding ground for frauds. Frauds start where control environment weakens. So telling that to people for whom it matters is very, very important. And today he has one of the very best speakers, Mr. K. Vidyadharan, who is a fellow member of the Institute of Chartered Accountants and is also qualified DISA from our institute. Let me tell you something on DISA. I am the chairman of Digital Accounting and Assurance Board. Reserve Bank called us, and Reserve Bank now wants us to regulate the entire system auditors in the country, whether they are chartered accountants or non-chartered accountants. We have been having preliminary discussions on that. So what I want to put forth is that your institute, the Institute of Chartered Accountants of India, is scaling newer heights day by day. Mr. Vidyadharan has served in the following large industry for a number of years. He was in Alstom, Chennai, Madras Fertilizers Limited, Chennai Philips India Limited, Mumbai, all Fatayam Group in Dubai. He is now practicing chartered accountant for past 25 years and he specializes in internal audit, risk-based audit, again a very important area, due diligence, tax audit, transfer pricing audit, limited reviews for listed companies. He has traveled widely to all important countries across the globe. He is a guest faculty with the Institute of Chartered Accountants of India, with the Institutes of Internal Auditors of India, Madras Management Association, University of Madras, CAG Regional Training Institute, Society of Auditors, etc. He is a past president of IIA and currently serving as an advisor of the Publication Committee of IIA and the chairman of the Programs Committee of IIA Madras chapter. He has also authored a book titled Fraud Prevention and Detection Through Internal Controls. I was here. Fraud prevention and detection, internal controls, if they are weakened at an area, the fraudster will always strike on that area. He contributed so many articles, and his article on application controls, a total approach to its audit, was first published in the CA journal and won the best paper award from the Institute of Chartered Accountants of India. Ladies and gentlemen, I will not stand between you and such a great, astounding personality, Mr. K. Vidyadharan. I thank my chairman, Mr. Arindar Kumar, for inviting such a towering personality and the entire board for holding such programs which are for the benefit of membership at large. I want to add here that every Wednesday now we are having programs of the International Standard Board to keep you abreast with the latest changes and ensure that you scale newer heights day by day in the internal audit profession. Thanks a lot, Mr. Chairman. Over to Mr. K. Vidyadharan for his presentation. Thank you. Thank you so much.
Respected Chairman of the Board of Internal Audit and Management Accounting, Mr. Rajendra Kumar, popularly known as RK in our circles, and Vice Chairman, Mr. Nandaji, and delegates who have joined to listen to this webinar, ladies and gentlemen. Good evening to everyone. The topic of today's webinar is current trends in internal audit and shift internal audit practices practiced in India by Indian Chartered Accountants. In fact, any company you take, any organization, they have to fulfill the expectations of their customers. Similarly, internal auditors, they have to fulfill the expectations of their customers, that is, stakeholders. So, in this presentation for 2 hours, we'll be covering stakeholders of internal audit. We will see who are the stakeholders and expectations of stakeholders, past and present. We will look into it. And I am classifying or categorizing their expectations into two categories: risk and speed oriented expectations and technology oriented expectations. And then I'll dwell upon who is my target audience. I'm not going to talk to MNC auditors or MNC companies having turnover of 10,000 crore or 20,000 crore like that. But in the ground level, small and medium enterprises and small and medium practitioners, what they are doing, what they are expected to do, I will dwell upon. Then, to be on the same wavelength between you and me, I'll be discussing about understanding in depth about the risk and mitigation measures. I'll take some examples of risk, business risk, which we encounter day to day in business, and what kind of risk reduction measures we can think of. And then characteristics of risk, we will see what are the unique characteristics. And then we will see a few definitions. We will go in detail. In addition, we will look into different styles of management. The current thing is risk-based management. Before that, there were a number of other management styles. We will differentiate that and come to risk-based management. Then we will look into the responsibilities of internal auditors as per the definition given by the institute, and then take up the swift practices of internal auditors in their day-to-day life when they carry out internal audits. There will be swift risk assessment. That means how risk assessment can be done in a quick manner. Normally, risk assessment in a medium-sized company will take a month or two, but the stakeholders, our customers, are not likely to wait for that long. So how do you do quick risk assessment? That we will see. Then risk matrix. How do you arrive at the risk rating? What are the steps involved in risk assessment? At the end of it, you get the risk matrix wherein risk rating is done. I will explain what are they. And then accelerate the audit cycle. That is, if you are doing internal audit, there are number of stages, number of steps, number of phases. 1 to 10 there are. But if you follow religiously one after another in a sequence, it will be a few months when you complete a particular assignment. But again, the stakeholders, our customers, want results in a quick manner. So how to accelerate the audit phases, we will look into it. Then swift reporting. Reporting, what kind of reporting? What are the various types of reporting? How to report in a quick manner after you find out observations, audit findings. In a quick manner, how do you do? With examples, I will explain. Then automated controls review. Any control, if it is there and you are checking on a periodic basis, it is not going to be of much use to the stakeholders. It has to be programmed control, automated control. On a continuous basis, it should work. I will explain with examples. Then impactful reporting. When you are reporting to the stakeholders or auditee, they want the reports to be stated in a particular fashion. What they are, I will explain. These are all the expectations of your customers or stakeholders. Finally, I will touch upon risk-based audit plan. That is, basing on risk, you select the audit areas for your annual audit plan. How do you do that? I will explain with example with some tables and all that. Then we go to the concluding thoughts. Our stakeholders, as you know, they are our customers, functional managers, departmental heads, CEO, MD, audit committee of the board, statutory auditors, owners, shareholders, regulators. These are our customers. And let us see what are their expectations. These are the expectations of our stakeholders. It has been there quite number of years or decades. They expect the internal auditor should be control experts. We are supposed to be experts in internal controls in any functional area, any activity, take for that matter. You should be experts in internal control systems for any such areas which you are going to audit. And you should be well versed in the business processes also. So whatever business you are going to audit, you must be well versed in the business processes. Then only for each of the areas being audited, you can suggest practical, useful control measures to mitigate the risk. Then our expectations of the stakeholder will be recommendation should be pragmatic. They expect practical solutions. When I say pragmatic, I mean practical. We cannot give theoretical solutions. We should give practical solutions, and based on or after taking into account the practical situations, resources available with the auditee, then only we should give our suggestion. And also we should consider cost benefit analysis. We cannot say go on introducing new controls, additional controls without minding about the cost of control. So cost benefit analysis, your suggestion should be cost effective. Then we should give executive summary. We cannot be giving a very lengthy audit reports coming into hundreds of pages kind of thing. You may give a lengthy report to cover all the observations, but there should be an executive summary which will be 1 or 2 pages only. We will see what are they, how we have to draft executive summary. Then we should also highlight positives. Our stakeholders, our auditee expect us to tell what good things have been done by the auditee. It is not only a fault finding mission. You are examining the entire controls in the system, and wherever controls have been taken care nicely, you report it. You report the positive things also, compliment the auditee for the positive things. So these are all the expectation which has been there for quite some time. Now let us look into what are the new or current expectations. How are we going to meet up with them? I call it as enhanced expectations. I divide it into 2 categories: risk-based, risk-oriented expectation and speed-oriented expectation. And another category will be technology-oriented expectation. Coming to risk-oriented, speed-oriented, there are 5 things which are their expectations. They expect us to identify the risk swift manner. That is why I said swift risk assessment. We will see with example how do we do that. Then automated controls on priority basis. Programmed controls, continuous controls on priority areas. How do we do that? We will see with example. impactful reporting. Reporting should be impactful so that it clearly comes into the mind of the auditee and everybody, so that corrective action can be taken in a timely manner. Then IA process rejig, accelerate the audit cycle. As I told you, audit process is a lengthy process having 10 or 11 steps. But how do you accelerate it? What are the phases which can be accelerated? That is why I say IA process rejig. Rejig means reorganize. How do you do that? We will see with examples. Then risk-based audit plan. Basing on risk, you conduct risk rating for each and every audit area, and then select, basing on the risk score, you select the audit area after considering resources available with the auditee. So these are all the risk and speed oriented expectation, which we will look into in detail in the slides which we are going to have. Coming to technology oriented expectation, continuous monitoring of cyber security is wanted by the auditee, and they expect the internal auditor to use computer assisted audit techniques, and also they expect for every information system application, documentation should be pakka and available, updated documentation should be available. This area is a niche area, and normal internal auditor cannot take this into consideration while doing their audit. We need the help of technology oriented internal auditor, maybe CISA qualified person kind of thing, IS auditor. But what I can tell you at this stage is that I have written an article on the application control review. That is, if an application using purchased software or in-house developed software, there is an application. How do you audit the application with application controls? I have written an article which, while reading my biodata, Mr. Nandaji also told that it got the best article award for that year. In fact, our institute has got a system wherein every 1st July CA Day celebrated in New Delhi in a grand manner, in which they give number of awards for various things like best presented annual report, financial statement, etc., etc. One such award is for in that 1 year, 12 issues of the Chartered Accountant Journal. What are all the articles published? They select one article and give a best paper award, which I got in that year about 10 years ago or so. If any of you would like to go through the article, I can give a copy of the article to Secretary of the Internal Audit Standards Board, Madam Aarti Bansal. You can get a copy from her. Then coming to documentation, which is very important. In fact, for any application, any project, documentation is very, very important. When I say documentation, you consider a building complex. In a building complex, you want to tinker with or you want to change the electrical system. You need a electrical diagram. So documentation is like a electrical diagram for a building complex. For a IS application, documentation is similar to this kind of electrical diagram. You see, without that, you will not be able to change the system, monitor the system, or give training to new people coming into your organization who are going to operate the applications. So documentation assumes very important role, and important consideration should be given to documentation for every application. In fact, I have written a detailed article on documentation framework for IS applications covering system documentation, program run chart, all those things in a detailed manner, running to about 10 pages or so, which has been recently published by Institute of Internal Auditors in their journal Internal Audit Today. Some 5 months ago, I think it was published. I can give a copy to Madam Arti Bansal. Any of you wanting to go through that, you can go through that, get a copy from her. So now we will take up risk oriented and speed oriented expectations, enhanced expectations of the stakeholders. Before that, I would like to tell you, define my audience. I'm not going to talk to large industries where 10,000 crore turnover, 20,000 crore turnover, or 40,000 crore turnover kind of companies, nor I'm going to talk to MNC auditors or big audit firms. I will look into SME sector industries and small and medium practitioners, SMPs. In fact, as per the MSME law, Micro, Small and Medium Enterprises Act, micro means a company where investment in plant and machinery up to 1 crore and turnover up to 5 crore. Small enterprise means investment in plant and machinery up to 10 crore, turnover up to 50 crore. Medium size industry means investment in plant and machinery up to 50 crore, turnover up to 250 crore. But for all practical purposes, for my discussion purposes, I will consider companies up to 1000 crore turnover. For my discussion purposes, I will give examples considering this type of company. And also in such a company, financial accounting system will be through Tally ERP 9 or Tally Prime nowadays, and or it may be in a developed in-house developed system, but it will not be SAP or Oracle. So I am not going to discuss about auditing under SAP environment or Oracle environment. I am making it clear now so that it will be useful to mass number of auditors who are SMPs all over India. It will be useful. Also, in such a company, no separate risk management function will be there. No chief risk officer will be there. No risk register will be ready-made available for the internal auditor. Internal auditor has to conduct risk identification, risk assessment, and do the risk rating, risk profiling, and then prepare the risk register for himself, and then go ahead with his audit. So this is the atmosphere which we are going to consider for our discussion purposes. Now, before going into current trends in internal audit practices, let us look at the risk management process in a brief manner so that you and me will be in the same wavelength when discussing about the risk management and risk-based approaches. I'll take up few examples of risk. Business risk, enterprise risk. While running a business on a day-to-day basis, what kind of risk you will encounter and what kind of mitigation measures, what kind of risk reduction measures you have to consider, you have to think of. First, let me take accident due to wet floor. In a factory or in a restaurant, due to wet floor, the customer falls down and injures himself, maybe a fracture kind of thing. So what he will do, he may sue the owner of the company for causing damage to him, for causing losses to him. So what kind of mitigation measure, risk mitigation measure, risk reduction measure you can think of? I am requesting the audience to give their answers quickly in the question box. I will have a look at them, then I will proceed. I'll give 30 seconds or so that you can give answer. Can I request Jay? I'm opening the question link.
Yes, sir.
What is the user ID? Admin is the user ID, is it not? And what is the password? I'm opening in my laptop separately.
Sir, I'm sending in chat box.
Checkbox. I whatever you think of. You have little more time before I give the open up my question box in my laptop. 1 second. I'll take few more minutes. Many people have given answers. We are using SAP. Please take a session on it. Safety precaution insurance is the answer somebody is telling. Frequent mopping of the floor. Cleaning should be before office time. Put a system in place for checking the floor. Ensure the uh, wet floor signs are displayed. Excellent, excellent. Very good answers. So that's what I have also given here. Keep the floor clean. And one thing nobody has told is train the staff. In a restaurant, you have to train the waiters who are servers for properly serving the food. In fact, accidents have occurred when the server, while serving the hot dishes, spilled over. So hot coffee or boiling thing and things like that will cause damage, and they can sue the owner. And rightly stated by many people, insurance is also to be taken. Excellent participation from the people. Then let us take food allergies. Again, in a restaurant environment, customers are coming, taking the dishes, Afterwards, they are having problems like allergies, so they sue the company. You have used wrong ingredients, kind of thing. What kind of mitigation measure you can have so that you can avoid this kind of damages being claimed by the customer? I need answers from you, audience, please. Take your own time. I give you 30 seconds. How to go forward, Jay? It is not moving. It is showing one page. I have to say download questions. After 8, it is not showing. Jay, can you help me?
Yes, sir.
It's not showing.
What, sir?
In fact, we will not be able to ask each and every customer, do you have any allergy? So I will serve you food which is not having allergic thing kind of. But the another answer is the correct one. Specify the ingredients in the menu card. In fact, if you see number of fine dining restaurants give a menu card for each and every dish, they will give main ingredients specified. In fact, they will mention gluten-free dishes. Gluten-free means without any usage of wheat flour. Many people are allergic to wheat, so they want gluten-free food dishes. So you specify the ingredients in the menu card, then that will save you from botheration of any claim made by the customer. That is the thing. Then we'll go to another area, customer data theft. Yeah, 9th and 10th visible, asking customer about do they have any allergy kind of thing, mentioning ingredients in the menu. Excellent, it has come. And then, yeah, let's go to customer data theft. See, when you go to a petrol bank, you give your credit card for payment, or in a restaurant, you give the credit card for payment. What the person sometimes does, takes the credit card inside the cabin, his room, and then swipes it, and then he comes back for the pin. You give the pin, like that it does. In a restaurant or in a petrol bunk, he does like that. And he may stealthily note down the credit card number, name of the person, expiry date, CVV number. All that he will note down. And what he will do, there are people who buy this data at a price. For each data, each credit card information, they may give 25 rupees or 30 rupees. So per day, the person working in the restaurant or petrol bank, he may get few hundreds, 500 or 600 or 700 rupees out of this. And if it is later on known that this fellow has stealthily taken the data and given it to the people, not only the person will be in trouble, even the owner of the petrol bank or the owner of the restaurant can be sued by the customer for having done this. What kind of risk mitigation measure you can have for this kind of fraudulent, risky activity? Please answer uh, please answer in the question box. To restrict the access to customer data with proper authorization and policy. Okay, very complex answer. Let me wait for some more answers from the people. How will you mitigate this kind of risk? Customer data theft and a claim being made on the owner is burdened with the claim. Use technology to mask the confidential data. Okay, technological solution, which is we have to see whether it is cost effective, cost benefit analysis we have to see. Anyway, what I am suggesting, a simple measure by the owner of the petrol bank or the restaurant stating that the person should not bring the credit card to the cabin or his room. He should stay in the dining table itself. He will bring the swiping machine to the dining table and swipe it and tell the customer, don't ask for the pin. Give the swiping machine to the customer. He will enter the pin. So the answer will be, simple solution will be swiping machine at the dining table itself. Okay, let us go to next one. Product recall. See, nowadays, automobile companies, car manufacturers, they recall the product for some manufacturing defect. So repeatedly, customers are coming with the same problem, maybe engine issue, gearbox issue, brake pedal issue. This have happened to many of the car companies. In fact, name any car company manufacturer, they have recalled their product. Name any brand, most of them have done that. So that means after seeing many people are coming with the same problem, they examine internally, the engineering people examine it and find out that there is a manufacturing defect. So they have to repair all the people who are complaining. Not only that, they issue a notification in the press stating that cars purchased from this date to this date are having the accession number, machine number from this batch to that batch, covering maybe in some cases 1,000 vehicle, 5,000 vehicle or 10,000 vehicle. All these things to be replaced with the proper part or repaired at the cost of the company, and it is given free of cost to the customer. That means heavy financial burden for the manufacturer. How are you going to solve this kind of sudden financial burden which will be faced by the manufacturer? How will you mitigate the risk in this kind of thing? Please give your answer in the question box. Please think over and tell me what this manufacturer should do to take care of sudden financial burden, heavy burden on the part of the company, what kind of solution may be available to smoothen the process? I'll give you 30 seconds more. Quality control analysis is one answer. That means don't release the vehicle with the issues. There is a practice for companies, whether it is machinery manufacturer or automobile car manufacturer, they may find some known issues. Even then, if the launch date has come, they will release the vehicle knowing very well that there are some known issues. So what this person, Mr. Trapti, saying is that quality control analysis is a must. Any other answer, please? How will you mitigate this kind of sudden burden on the financial obligation of the company? Because you might have seen in the newspapers, very many manufacturers, I don't want to name any company in a public forum like this, they have given advertisements or press release in the papers stating that please come, product recall, we will repair free of cost, replace the parts free of cost. It's a big financial burden. Yeah, inspection at stages of product manufacturing. Stop sales at the first instance of reported defect to contain the reputation damage. Good. But I will tell you, I am emphasizing there is a financial difficulty. How will you solve the financial difficulty? You may stop manufacturing, but then you have already sold thousands and multiple number of vehicles, thousands of vehicles. So what has gone into the market, you have to, no other go, you have to recall and do the repair free of cost. So the answer lies in product recall earmarked fund. As soon as you release a vehicle, new model, your financial CFO should advise the management, a fund should be created specifically for product recall. If it happens, a earmarked fund, keep it aside so that the financial cushion will be available. That is the answer for this one. Then next one, vendor unable to supply. See, you have number of raw materials purchasing from suppliers. Suddenly one supplier unable to pay, unable to supply the raw material. Supposing that raw material happens to be critical raw material, then you will be in problem. Your production line will stop because it is a critical raw material. If it is a normal raw material, substitute material can be used. When I say critical, it means there is no substitute. Only the same product has to be, material has to be available to run the production. So what is the measure by which you will avoid such a sudden stoppage of supply of critical raw material? What is your answer? Please give your answer in 30 seconds. Lot of answers have been given for the previous query, product recall. I appreciate and congratulate the people. But no one has talked about the earmarked fund. Somebody telling about insurance also. Yeah, vendor unable to supply. Especially, I am concentrating on critical raw material supply. What is the risk mitigation measure? Please come up with your answers. Yeah, some answers have come. Create a pool of alternate suppliers to avoid this. Excellent. Backup vendor to be identified in advance. Find the substitute supplier. Have a buffer stock to cope the problem for a reasonable period. Yeah, excellent. Buffer stock. But if the supplier for a prolonged period, if he is not supplying, there is a good point that you must have alternate supplier. But another problem will be if you are having the alternate supplier in the same locality. Suppose your factory is in a particular town, nearby town, you are having 3 suppliers for the critical raw material. All of them are located in the same locality, same town. Then that is also a risky thing. You must advise the vendor procurement manager that for all critical raw material, the alternate supplier should be situated in different location, because if there is a problem, supply chain problem or cyclone or flooding in one area, all the suppliers, manufacturers in that area will be affected. So even your alternate supplier will not be in a position to supply the goods. So you must have alternate supplier in a different location, at least for critical raw material. So we are in the same wavelength. Let us go to characteristics of risk. Let us understand risks in depth. First one is not visible to me. Uncertainty of occurrence is the first one. That band, how to close that band, Jay? Because the screen is not visible at the top. Jay, can I close the... Okay, I will read out. Uncertainty of occurrence is a hallmark of risk. You do not know whether it will occur definitely. The likelihood of occurrence, the probability of occurrence is not 1. If the probability is 1, that means it is certain that it will happen. It is not to be treated as a risk. So in this case, risk means there will be probability will be less than 1. Another point characteristic is cannot eliminate, only mitigate. Elimination means 100% reduction of the risk is not possible. That is why it is a risky thing. And we can only mitigate. When I use the word mitigate, I mean reduce. We can only reduce to even 90%, but then cannot reduce it to 100%. Downside, any risk for that matter, if it occurs, you say there is a likelihood of occurrence. When it occurs, consequence will be loss, impact will be loss. But upside is also there. Not every time downside. There will be opportunity, there will be gain by implementing effective risk treatment measures. In fact, when I say risk treatment, there are 4 T's. Terminate the risk, transfer the risk, treat the risk, tolerate the risk. When I say terminate, any activity which is causing enormous risk, don't undertake that activity. You can stop doing that activity. you can stop that. That is what is known as terminate the risk. Secondly, if you are unable to terminate, transfer the risk by way of giving the activity to a subcontractor or outsource the activity. Somebody else can do it so that you can transfer the risk. But there is a risk in this transfer. After transferring to a subcontractor or a outsourcing person, new kind of risk will come at the location of the subcontractor. What kind of risk mitigation measures are there? We have to see risk assessment, risk identification. We have to see new kind of risk may come up, but your risk you can transfer. Another classic example for transfer of risk is insurance. You transfer the risk to the insurance company and you pay the premium, which is a small amount, so that when the risk occurs, you can get some insurance claim. Then comes third T is treatment of the risk. How do you treat? You introduce new controls, additional controls, internal controls. That is where internal auditors are experts in internal controls. So for any activity, any project, if there is risky things are there, introduce additional controls, but considering cost effectiveness, cost benefit analysis, introduce practical controls by which you treat the risk or mitigate the risk. And wherever it is not possible to eliminate fully, you live with the residual risk. The remaining risk is known as residual risk. You tolerate with the risk. That is why 4 T's are there: terminate the risk, transfer the risk, treat the risk, and tolerate the risk. And last but not the least important, certain risks are always end up in a loss. What kind of risk will end up in a loss? I am putting a question to the audience. Please tell me, think over and tell me what kind of losses, however treatment or transfer or treatment or whatever you do, you will end up in a loss only. What kind of risk end up in a loss? Please give your answer. $30, please. Certain risks will result in net loss. You may have insurance also, but then you will not be compensated fully. That is the kind of risk which will result in a net loss. What is that? So far, no answers. Let me tell you, in the case of, there is a one category of risk known as hazardous risk. That is accidents, motor accident, fire accident, accident due to loss due to flooding, cyclone, tempest kind of thing. You may have insurance policy, but insurance companies, while settling the claim, they have number of deductions for certain reasons. So you will end up in a net loss only. So hazardous risk will end up in a loss. Inherent risk, somebody has answered here. Acceptance of risk, regulatory violation, inherent risk, natural calamities. Excellent. That is what I was expecting. Right. Now, know more about risk. Let me tell you great sayings about risk. Know your friend close, your enemy is closer. You must know your enemies closer than you know your friends. Know your opportunities well, your risk very well. And there is a person called Harold Skipper. He is considered as the world famous risk management guru. He once said, there is no definition of risk which is universally accepted. There are a number of risk definitions given by various institutes and universities, but there is no universally accepted single definition. One such example of a risk will be a situation is risky if a range of outcomes exists and actual outcome not known in advance. It is not known in advance. It is likelihood of occurrence is not, probability is not one. Another definition I can tell you, risk management is all about vulnerability and taking steps to reduce it. So we have understood about the risk. Now, different styles of management. Finally, we are now facing with risk-based management. Every company, every activity, every organization, whether for-profit organization, not-for-profit organization, even a hospital or a road transport company or a NGO, everyone should look at the risk, and basing on the risk rating, he must manage his enterprise. There used to be what is known as management by objectives. Define the objective, define the goal, work towards it. That is called management by objective. Management by exception. Find out the deviation, eliminate the deviation, and by which you achieve the goal. Another category of management is management by carrot and stick. Reward the person doing good, punish the person who is not doing well. So this is one style of management. And another style of management, there are number of managers who instill fear on the people working under him. Always they will be under tenterhooks. So because of fear, they perform. That is one style of management. And finally, the in thing will be management by risk. For every organization, this is applicable. That is what we have to understand in depth. As per the institute definition of internal audit, responsibilities of internal auditor twofold. One as an advisory, that is as a consulting service. Another one is assurance service. Under assurance, you have compliance, statutory compliances, rules and regulations, whether policies are followed, all these things you take care under assurance category. Under advisory category, broadly divided into three: review of control systems, internal controls in any area, any functional area, whatever activity, and review of governance system, corporate governance, and review of risk management system. So that is the new thing now. In fact, risk management is a separate function. In large industries, you will find separate risk management department. In fact, I have worked in some companies where, MNC companies, there is internal audit department, another department called the internal control department. They will be introducing controls under various categories, and whenever there is any new activity chosen, a note will be sent to the internal control head. He will prepare the internal control manual and give it to the people to follow. So there is a internal audit department, internal control department, and risk management department. That kind of thing. So if there is a risk management function, audit of risk management function itself is the duty of the internal auditor. That is what I want to emphasize here. Now we will come into proper SWIFT audit practices. SWIFT risk assessment. Risk assessment has got number of stages. First thing is identification of risk, then sources of risk to be identified, that is causes of risk. What is the reasoning? You have to find out. Then you have to find out what is the likelihood of occurrence. What is the probability of occurrence? That is third step. Then you have to see the consequence or impact or loss if the likelihood becomes reality. If it actually occurs, what is the impact? What is the loss? That you have to see. And then you have to introduce control, treatment, risk treatment you have to do. Afterwards, residual risk. Then you prepare the risk register, wherein a matrix, risk control matrix, what are the risks, what are the controls, and what is the additional controls to be introduced, and what is the impact or loss if the likelihood happens. So that is a long drawn process, but you have to do quick process. I will explain that as we go by. Then accelerate audit cycle. Audit process, as I told you, 10 different stages are there. We will explain in detail as we go by. Then SWIFT reporting, we will look into it with examples. Then automated controls, programmed controls, we will look into it. Impactful communication of finding. How do you communicate your audit findings? There is a methodology, technique, and system that we will see. Then risk-based annual audit plan. How do you do risk rating? Risk score, how will you give for each and every audit area? Basing on the score, highest score area will be selected first, then another area, like that. We'll go into one by one. SWIFT risk assessment process. First step itself, quick identification of risk by interviewing, questioning functional managers. Let me take an example of safety manager. How will you interview him? How will you question him? In a company, there are number of buildings, administration building, technical service building, building near the plant, then plant and machinery, everything is there. So you ask him, you call him for risk identification, risk assessment meeting. The safety manager, his assistant, all are coming. You as internal auditor, your assistants are sitting on the other side of the table. You start questioning and take down notes to find out the risk in his particular function. You ask him, how have you taken care about the building safety in case of fire? What kind of fire detection system you are having? What kind of fire extinguisher you are having? He tells proudly, sir, I am having heat detector installed in every building near the plant area and every building. So when there is a fire, there will be heat. So fire will be detected and there is a alarm will be given in the safety manager room, production manager room, and also nearby located fire service station, an alarm will be given. So we have interconnection like that. So the people will come and extinguish the fire. You ask him, is there not a better fire detection system than heat detector? He tells, sir, this is the best, sir, heat detector. That is what is available in the market. We have purchased and installed. You tell him, why not smoke detector? Why not you install smoke detector? In fact, it is known when there is a fire, first smoke will emanate from the area, from the building. Inside the false ceiling, whatever fire happens, heat will not be generated quickly. It will take time to generate heat so that heat can be detected by the heat detector. But first will come smoke, dense smoke, because your false ceiling and buildings and all that are having polymer material, plastic material. It will produce smoke. So if there is a smoke detector installed in your system, in your building, fire detection will be quicker and quick extinguishing can be done. So there is a risk, you note down and immediately you write to the management, your company is having a risk in this area, safety devices are not proper. So you have to enhance the system by installing a smoke detector instead of having a heat detector. This is one point. Another point, he will tell, you ask him, what is the fire extinguishing system you have installed? He will tell proudly, sir, we have sprinkler system, water sprinkler system installed. Then you counter him by saying, if water is spilled by the sprinkler system, it will damage the floor, it will damage the documents, it will damage the furniture, it will damage the computer. So there will be damage, another kind of damage. One damage because of the fire, another is because of extinguishing system is water, it will damage all these things. So why not to think of halogen gas? There is a fire extinguishing system which comes with halogen gas that will be released by the fire extinguishing system, so that halogen gas is safe on the people. It is not like carbon dioxide, which is not safe to the people living places. So halogen gas is safe for the people and also it will extinguish the fire quickly. So and again there is a risk. You report to the management quickly, then and there. So that is another thing. Then you go to plant maintenance manager. You call him for risk identification session or meeting. You question him. You ask him, plant maintenance manager, you have huge plant and machinery. You must be having preventive maintenance, repair maintenance, corrective maintenance, all these things. Okay. Do you have insurance parts list? You ask him. What is insurance part? When a plant or machinery is purchased by the company, the manufacturer gives an advice to the buyer. These are the insurance parts you must stock always, so that when there is a breakdown of the machinery, these are the critical parts required, without which you cannot repair the equipment or machinery. So that is why it is called insurance parts. It insures against your breakdown or downtime. That is why it is nicknamed as insurance parts. Otherwise, you can call it as critical spares. It is indirect material, not direct material like raw material. It is indirect material, spare parts for the machinery. So he will say, no, sir, we are having parts, but nothing is classified as insurance part. Then you note down, that is a risky thing. If there is a breakdown, if you do not have the insurance parts, then breakdown, downtime will be more. By the time you receive the spare, sometimes it will happen. They will say the spare is not available in the city where you are located. It has to be brought from Bombay or Delhi or somewhere else. So you have to send it by parcel, air freight kind of thing. It will take time. Till such time, downtime will be there, production loss will be there. So if you are having, as suggested, as advised by the manufacturer, supplier of the machinery, insurance spares is a list of spares that you should stock always. If that is not there, it is a problem. That is one thing. Then coming to procurement manager. Procurement manager, we know purchase manager, we know alternate suppliers are required. Point to be noted is, for critical, you interview him like this. Tell me, sir, how many raw materials your company is using? He will say 22 different types of raw materials. Then you ask him, out of the 22, how many are critical raw material? Meaning, if that raw material is not available, there is no substitute for such a raw material. That is why it is termed as critical raw material. Production will come to a halt. So, for critical raw material, are you having alternate supplier more than 2 or 3 suppliers? He will say, sir, I am having 3 suppliers. Well, there are out of 22, say 7 or 8 will be critical raw material. Ask one by one for this raw material, critical raw material 1, how many suppliers? Critical raw material 2, how many suppliers? Out of the suppliers, where they are located, you have to ask him. He will say they are all located nearby, very near the plant, so they will supply. That is a risk. They should be located in different locations. As I already told you earlier, that different alternate suppliers should be located in different location. If they are located in single location, when there is a supply chain problem or flooding or cyclone or rain havoc and kind of thing, all the suppliers located in this locality will not be able to function. That will be the problem. So that is one area we have to look into. HR manager. In fact, in one company where we were discussing about business continuity planning and disaster recovery planning. At the time, we told the HR manager, you keep a list of retired employees who are working in various machine shop floor, factories and all that. Also administration side everywhere, so that at times they may be helpful. You can call them for work in case you require. What happened once, some CNC machine, computer numerical control machine, which is a critical area where you have a production process. 2-3 employees suddenly fallen sick and they have not come to the factory for a prolonged period. At the time, the list prepared, suggested by the internal audit, prepared and kept by the HR manager was useful, found useful. He called the retired people of that section and they came to the factory and saved the botheration. So these are the ways by which you have to quickly identify the risk and report to the top management then and there. In fact, when I was explaining to my people, because we have started this kind of quick internal audit processes a few years ago, after we understood the expectations of the stakeholders and auditing. When I was explaining to my staff, this is how you have to do, then one apprentice said, sir, you mean to say you report it then and there, is it not? Exactly that. Then and there you report. Don't wait for the entire process of audit to complete. All the stages to be completed. At the end only you will prepare the audit report. No, then and there you report. That is why the quick or swift risk assessment. Composite risk matrix. In fact, risk assessment entire process, if you look at, first is identification of risk, second identifying the causes of risk, third identifying likelihood of occurrence of the risk, then if it occurs, what is the consequence or impact or loss, and then risk treatment, risk rating, risk register. So in that risk rating, otherwise known as risk profile, you have to classify them into extreme risk, high risk, medium risk, low risk. And you have to prepare a matrix like this. In x-axis, you mention consequence or impact. In y-axis, you mention the likelihood or probability of occurrence. And then you prepare a table like this for various areas. Extreme will be there, low will be there, moderate will be there. I have given a different coloring just to explain the concept. So you end up with the risk assessment with the matrix, which will be helpful for you for all purposes. This can be utilized by the internal auditor for selection of audit areas into annual internal audit plan. In fact, in the end of the slide, I have a methodology by which how to give the risk score for each and every audit area. I will explain that. Now let's move to next thing. Accelerate audit cycle or internal audit process rejig. When I say rejig, I mean reorganize. Internal audit processes, as I told you, there are 11 stages are there, phases or stages. First thing is risk assessment or preparing the risk register. As I told you in the beginning, my target audience is the medium-sized industry. They will not have ready-made risk register prepared by the risk management function. There is no risk management function in a medium-sized company with a turnover of 1,000, 2,000 crore and all. You cannot expect a separate risk management department. So you have to prepare the risk assessment. When I say risk assessment, the whole cycle, identification, cause, likelihood, consequence, then rating kind of thing that you have to do. Then comes initial study. You select a particular audit area. You conduct initial study by referring to previous audit reports, manuals, internal control manual, then other manuals you consider, SOP, delegation of authority, all these manuals you consider. Then auditing meeting, first meeting, opening meeting. Then you prepare the audit program, including checklist kind of thing, and divide the work between the staff allocated for the particular assignment. Then you conduct the field work. You go to the field, go to the audit department, you conduct the field work. That is the that will take long amount of time out of the entire cycle. Then you you collect all the points, deviations, various faults, whatever your findings of the patient, you collect everything and then prepare the discussion draft, and you go for discussion with the auditee along with your team, auditee team. You discuss each and every point, and they will give a counter. You discuss with them and convince them what is the final points are remaining to be put in the draft. Then you prepare final draft and send the final draft to the auditee. Ask them to reply. Next is auditee reply. He will give a reply nowadays through email. Earlier days, it is written reply. After incorporating the reply, you prepare the final report. Then after issuing, at the time of issuing the final report, you mention what kind of actions are required on the audit findings and recommendations, who is responsible for implementing the recommendation, what is the time expected to complete the implementation of the plan, all that you mention. Also, you mention, I will come for follow-up audit after 1 month or 2 months or 3 months. You mentioned that. Then you go for follow-up audit, then action taken report, all these things. Then comes documentation. Even though I have put the documentation phase as the last phase, it is not the last phase. Actually, it is a phantom phase. In fact, every stage, right from phase 1, 2, 3, 4, 5, 6, everything, wherever documents have to be prepared, notings have to be done. All those things should be prepared at every stage. That is why it is called phantom phase. Why I call it as phantom? Phantomos, you have the caricature. Phantomos is a person, imaginary person who is omnipresent. Everywhere he is present. Everywhere you go, he will be present. That is why the term phantom phase is given to documentation phase. So these are the things. So entire process, if you are following in a sequence, consecutive manner, it is going to take months for every assignment. You have to rejig, accelerate the cycle. What are the stages or phases you have to accelerate? I am highlighting with the red circle. Right from field work, discussion draft, final draft, audit reply, final report. This has to be reorganized. In the field work, as soon as you find out a major issue, critical issue, requiring attention of the management in a quick manner, immediately you draft a report, discuss with the people, have a quick meeting, and then agree on, issue the report. You may call it as a flash report or interim report, whatever. You have to do that. You cannot be waiting for the entire assignment to be over. So I say phases 5 to 9 to be accelerated or quickened. This is how you have to quicken the process. Let us see some examples. Consider a case of material outpass system. Some companies call it as outpass system. Many companies call it as gate pass system. Material gate pass. Material outpass, there are returnable outpass, returnable gate pass, non-returnable gate pass. Returnable are very, very important. You are sending material to subcontractor for fabrication purpose, or you are sending motor or other equipment for repair purpose. After repair, it has to come back. Likewise, you are sending so many items on a returnable basis. That is one thing. Non-returnable, maybe a sample you are sending on a non-returnable outpass that will be taken by the probable prospective customer, or delivery challan, that is a non-returnable. But for every delivery challan, it should end with a invoice. You have to match it and find out for every delivery challan there is an invoice generated, and then it has to go until the payment is received from the customer. So in a returnable outpass, there may be some problems you may identify. You have to report it in a quick manner. For example, the problem may be in the course of field work. In fact, in a company reasonably sized 2000 crore turnover or 1000 crore turnover, material outpasses numbering to around 50 per month. So 600 material outpasses will be there in a year. So if you are going to review all the outpasses and then follow all the audit phases and come out with a report mentioning major issues, it is time elapsed. So you have to report then and there. That is why one problem you may encounter as soon as you see the design of the outpass, returnable outpass, there may be a column missing. The designing of the format itself is wrong. So you have to report it immediately. Immediate action should be taken to redesign the form and reprint necessary thing. In case it is a automated system, there are some companies who follow automated system, separate, similar to payroll processing system. Gate pass system is also available. There are companies who provide this kind of service. If you are having that, it can give number of reports. So that another problem may be long pending materials not yet returned. Even though expected date of return is so and so, but a time of 1 month or 2 months or 3 months or even more would have elapsed, the materials have not come back. These are the issues, critical issues requiring immediate. This is a case of material outpass system. Safety audit. In the case of safety audit, there may be major risk, portable fire extinguisher, refilling long past the date. Such thing you have to immediately report. Or as I told you earlier, you find out water sprinkler system is there, you suggest halogen system. You report immediately. Don't wait for the entire audit to be completed. Or not stocking of insurance packs. That also you have to report quickly. So these are all the examples of swift reporting. Then critical insurance packs, non-availability. These are the things to be reported on a swift basis for attention to be taken by the auditee or the top management. Automated controls review of priority areas. Priority areas may be salaries or incentive pay, accounts payable, sales returns, plant maintenance, inventory variance analysis. Let us take one by one. In the case of salaries, abnormal wages, what you have to do in each and every area, priority area, you have to innovatively think of what kind of controls you have to introduce, give the specification to the in-house development team so that they will design in such a manner certain modules will be implemented in the financial accounting system so that on a continuous basis, on a daily basis, you will get exception reports. Salary means incentive or abnormal pay, accounts payable, payment before time or payment later on. There is a credit policy, credit period given to certain customer. You have to analyze between the date of payment and date credit allowed for a particular creditor supplier. If you are paying well in advance, you are losing money. If you are paying late, your credibility is lost. So all such things, sales returns, rejections. In fact, in one company, what happened? Sales returns of a particular product are coming again and again. Sales returns are happening. They are returning the material saying defective. We analyze why there is a defective. What happened to the quality control team? We checked the quality control, quality reports, quality assurance department. They have followed the system. They have given the green signal. Then only products were delivered, but it is coming as defective. When we checked, tested, it is really defective. Then we conducted in-depth analysis. There we found out, we asked them, production manager, quality control manager, and safety manager, plant people, all are sitting in the discussion, in-depth analysis. We asked the question, whether there is, how many processing stages are there for this particular product manufacturing cycle. They said 11 processes are there, 11 stages are there. For each and every state, whether a checking system is there, we asked the quality assurance people. They said there are only for nine checkpoints are there, not 11. How come there are 11 processes, 11 stages? You are having checkpoints only 9. Then we understood two additional processes were introduced recently, maybe 3 months ago or 4 months ago, for which proper training was not given to the quality assurance team. What is the checkpoint? What is the check they have to conduct? It was not, training was not given properly to the quality control people. That is why without the 2 checking, only 9 checking were conducted instead of 11, and the product were passed for delivery. So we analyzed this and found out. So this will come to light if there is a control point for sales return. It is not a quality control rejection. It is a sales return ending up in a quality control issue. You have to see the difference between rejection by quality control, why there is so much rejection, that is also an issue. But why there is sales return, after it is passed by the quality control, there is a return saying it is defective. That is a different issue. Again, a quality control issue. So this, because of innovative type of controls introduced in the day-to-day basis, programmed controls, we could find out sales returns are there. We analyzed it and found out the reason. Plant maintenance, I told you about insurance spares and all that. Then coming to inventory variance analysis. In fact, in an engineering industry for which we were the internal auditors, we suggested engineering industry, large industry, I mean, large means in my purview, it is large, but it is not more than 1,500 crore turnover or something like that. There are plant and machinery huge. For various machineries, spare parts are there. If you see the inventory value, it is huge. Considering the inventory of indirect material alone, spare parts inventory alone, it ran into several crores of rupees, very high. So what we did to analyze the inventory variance between any two dates, 1st April and 30th September, 6-month duration, take the stores ledger of 1st April, take the stores ledger of 30th September, give us input to the system. You have a program, specifications were given to the system people saying that analyze the value of inventory of each and every item, variance due to price difference, price variation, variance due to quantity difference, quantity variance, no variance, zero variance, non-moving, slow moving. Likewise, it analyzed. A program was written any time of the day, any time of the year. You want to study the inventory variance between 1 month period or 6 months period, 3 months period. You have to give 2 files as input. Stores ledger of the starting date, stores ledger of the ending date. It will analyze and give. After this exercise, we analyzed what are the non-moving. We found out of the non-moving, how many are obsolete, why it is non-moving. We analyzed with the production people. They said these items are no longer required. Our production processes have changed. These items are not required. Then you have to dispose of obsolete items to be disposed of, non-moving to be disposed of, slow moving, you have to identify how much slow. All that analysis was done and they sold as a scrap item, non-moving, slow moving, obsolete items and all that, realized a big money. And finally, the auditees themselves have stated in a management committee meeting. Every month we used to have a meeting. In the meeting, they declared internal audit has found out this, because of which we saved so many crores, and they have earned internal audit department. They have earned their salary for a period of 6 months. Like that, they made a comment, and that was the appreciation we received from the stakeholder or the customers of internal audit department. So this is how programmed controls on priority areas should be done, and then and there you analyze and report and take action. That is the crux of the matter. Critical reporting of audit findings, impactful reporting of audit findings. In fact, audit report, every observation, you have the executive summary, you have the detailed report, detailed observation, you have about 10 observations in a particular audit area. For each observation, you must give 5 C's. First C is condition. What you have found out. What is the mistake you have found out? What is the shortcoming? What is the lacunae? Whether internal control weakness or error, whatever you have found out, what is the condition? First C. Second C will be criteria. What should be the correct thing? You found out the mistake. What is the correct thing as per the policy, as per the rules, as per the laws and regulations, as per the internal control system, as per the manual, as per the uh, uh, delegation of authority manual? What is the correct thing? So first thing is what you have found out, and what is the correct thing. Then what is the reason? Cause. Third C is cause. Why there is a error? Why there is a mistake? Why there is a lacuna? What is the problem? You have insufficient number of people, manpower shortage, or system weakness, or people are not trained properly. They lack in the procedure. You have to give a training. All those causes you find out, and then give the consequence. Because of the lacuna, because of the shortcoming, because of the failure, what is the impact? You give it in terms of financial impact. Quantify it. Give a financial impact, and then give the corrective action. What is your recommendation? Corrective action should be pragmatic, practical solution. After taking into consideration cost benefit analysis and practicality, also consider available resources of the company, available resources with the auditee, then only you should give the corrective action. This is how each and every observation should have 5 paragraphs. You should analyze and give it like this. Then your report should have executive summary. How short it should be? The detailed report or detailed observation may run into as many pages as required. No restriction on that. You may have 40 pages or 100 pages or whatever. But executive summary, 1 or 2 pages only, because top management, important critical managers do not have much time to go through. But only thing is, in the executive summary, you give for each item, critical item only, you concentrate. Major item, major issues, critical issues, only you concentrate in the executive summary, and give a reference in the paragraph. Detailed observation, paragraph reference should be given in the executive summary. But how short it should be? There is an anecdote which I tell you, a funny anecdote. By knowing that anecdote, you will remember forever how executive summary should be. In fact, go back to earlier days when in United Kingdom, Winston Churchill was the prime minister during those days, I think 1940s or so. In the parliament, members of parliament, whenever their turn comes, they raise up and then give a long lecture, long speeches. This was annoying the Prime Minister Churchill. He said, members, you are taking much time. We don't have that much of time. You should be brief enough in your speech. Your speech should be like a lady's skirt, long enough to cover the essential, short enough to arouse interest. That is how it should be, he commented, and that was taken by the people seriously. So, long enough to this thing. In fact, there is a norm followed by the people. It cannot exceed 2 pages. Executive summary should not exceed 2 pages. So brief you should be. That is how you have to remember. Pragmatic solution you should give. Practical solution, I have repeatedly told you. Consider the cost benefit, consider the practicality, consider the available resources with the people. That kind of practical solution only you should give. Timely report, then and there you should report. Just as my apprentice told, then and there you report. Critical issues requiring immediate action, so you have to give that quickly. No errors in reporting, not even small errors. Even smallest error if you commit, then it will create a credibility issue for you. Then auditee or the top management who are reading the report will think there may be error somewhere else also. Like that, credibility will be lost. So even small error should not be there, because internal auditors are considered as trusted advisors. Whether a trusted advisor can give a wrong advice, you cannot give. So don't commit any error. Spell check and grammar, nowadays it is available online. Spell check and grammar, you must be very particular. Then reread final report for errors. In fact, final draft, once it is prepared, you have to read it fully. In fact, we used to follow a system. If you read it on the monitor itself, you may not find out. You have to take a printout and read it carefully. Then you will find out the error, which you can correct. Then recheck arithmetics. Arithmetical calculation, addition, subtraction, division, percentage, all those things, you must recheck. Not even a single error should be there. Compliment for positive performance. That is one of the expectations of the auditee stakeholder. Even the top management wants to know what are the positive things. Don't report only the errors. Report wherever they are positive, wherever they have fulfilled the obligation, wherever they have followed the procedures. You highlight and give a complimentary note also. That is how the reporting should be. I think we have only 10 minutes. I want to utilize some time for question and answer. Let me see what are the. I want people to type out questions in the question box. I will see it and come to you for reply. Now, next thing will be risk-based annual audit plan. You prepare the list of audit areas. In a company with 1,000 crore turnover, there may be 40-50 areas, cost centers, which are to be audited by the internal auditor in a year. But you may not have time, you may not have resources, you may not have manpower, you may not have budget facility for travel, you may not be able to do entire all the 40 areas in a year. You have to stagger, for which you require risk-based selection. So list out the areas, then establish criteria for estimating risk exposure. Maybe different types of exposure you analyze. For example, value of the transaction, quantity of the transaction, previous audit report in that area, whether adverse comments are many or positive comments, or segregation of duties in that area, how it is. Likewise, serious criteria, risk exposure criteria you have to define. Then for each criteria, you define the risk level. It is a judgment by the auditor, auditee, and risk management team all put together, give a risk level for each criteria. Then for each criteria, attach weightage. If it is simple risk level, it is like arithmetic average, common average. If you give weightage, it is a weighted average. In fact, for crossing a river, if you find arithmetic average, you will be not successful in crossing the river. You may sink. You have to find out weighted average. That is why weighted average is given. Risk level multiplied by weight will give the risk score, and work out risk score for each and every audit area. 40 areas are there. All the 40 areas, you prepare the risk score and sort audit areas in descending order. Highest risk score on top. Select from top based on the audit resources available for the internal audit department. I don't want to go into details of working. With this, I complete. At least we will have 5 to 7 minutes for question and answer. Concluding remarks, I will tell you. Long drawn audit process, audit cycle not liked by the auditee. I have given enough reasoning for that. From customer satisfaction, you must achieve customer delight. For example, you are purchasing a car. You have free service, 3 free service or 4 free services. You receive a call from the car company. Sir, your first free service is due. Please bring the car. We will do the free service and give it to you. You do that. They do it properly. It is you satisfied. That is customer satisfaction. Customer delight will be the same car company tells, sir, your car is due for free service. We will send a driver with a proper driving license, proper identification card. He will pick up the vehicle and he will, after the service is over, he will bring back the vehicle and give it to you without any charges, free of cost. If that is the thing done by the company, that is customer delight. Similarly, internal auditor, if he follows the entire audit process and gives a report late, justice delayed is justice denied. That is how they should rejig the audit process, quicken the audit cycle, shorten the audit cycle, and give the report then and there. That is customer delight. Managers give a problem today, they want answers yesterday. That is the speed with which nowadays people are working. You must be aware of that. Therefore, swift audit practices is a must for everybody. With this, I come to the end of the presentation. If there are any queries you want to ask through email, kvdharan@gmail.com. Let me see what kind of questions are there. Even a simple delay in deposit of TDS, natural calamity. Can you please suggest some sources where we can find area-wise checklist for internal audit for practice? Yes, I would suggest guidance notes published by Institute of Chartered Accountants are very helpful. They have come out with internal audit guidance notes for various areas. That will be very useful. You go to the website of Institute of Internal Auditors. It is a sister concern headquartered in Florida, having branches in more than 170 countries. They have a very good website. If you become a member section, it will allow with the password. There lot of study materials available. Audit checklist, name any audit area, it will give a checklist. When there are direct cost savings as a result of observation, it is easy to quantify. But how to highlight indirect benefits to client by way of system improvement? Yeah, wherever money terms you can quantify, you can quantify. Otherwise, without monetary term, you can give quantification. Statement of fact you can give. You cannot say, in my opinion, it is possible, it may be possible. That kind of sentence you cannot give. You should say, it should be possible for you to do this. You enumerate, give a factual reporting. That is how you have to do. Wherever monetary terms you are unable to give a impact quantification. Any other questions, please? Another 2-3 minutes are there. Mr. Agarwal, it was very useful. Please share the presentation. One person said, what should be a good length of detailed observation in a project audit? Pages or observations? Maybe it should not run into hundreds of pages. It can go to tens of pages. 10, 20, 30 is okay. Because you must know how to write precisely, briefly. Pre-C writing, we have a question when we studied in colleges. Pre-C writing itself has got a mark in the English paper. We used to do that. So writing briefly is more difficult, more time consuming. You must cultivate the habit of precisely writing, pre-C writing, briefly writing. Whether 50 observations in an assignment are welcome. No, it is okay, but you have to classify them into critical issues, major issues, and put the other things as minor so that the top management may not even spend time to look at it. They may not have the time to look at all the 50 observations. It is not the case where all the 50 are critical or all the 50 are major. There may be major 5 to 10. You classify them as critical issues or major issues, and then non-critical items, minor items, moderate, risky. In fact, you have to give for each and every audit finding observation, you must give the rating in terms of risk, whether extreme risk, high risk, medium risk, low risk. That is also required to be given. If an action plan fails, the person has asked for a critical risk and alternative plan needs to be brainstormed, would that point be reported as not feasible, hence closed? Should be reported as delayed, hence retained in action taken. Tracker. You must retain it. If there is an issue which is pending, action taken report, you must mention due to this reason it is kept pending until resolution is found. These are the questions I received. Any more? Within how many days an assignment 1000 crore project should be concluded if the team size is 4 auditors? I think if I will tell you risk assessment, that is identification, cost, likelihood, impact, rating, and your risk register. That may take for a medium-sized company 1 month. For a large industry, it may take 2 months or 3 months. But assignment, try to complete within a month maximum, and in between give quick reporting, swift reporting, then and there, using flash report. Nowadays we give reports through email, but for record purposes, we give a copy in print and then get a signature and keep it in the file. That we follow. You should not take more time. Yes, Mr. Agarwal? Not audible, not audible. You are.
Yeah. Thanks.
Yeah, tell me, sir.
So,
Not audible, sir. Agarwal, you are not audible. Video stopped.
it was a nice.
Yeah, I'm able to hear you.
Yeah. Okay. Thank you, sir. So it was a very nice session from your side. You have touched upon various aspects of the current trends and the swift internal audit practices which are still prevalent in India. And for the future chartered accountants, you have shared tremendous information. I wholeheartedly thanks our eminent speaker C.K. Vidyadharan for touching such a nice topic and sharing his knowledge and other aspects with the participants of the day. And a special thanks to the Honorable Chairman C. Rajendra Kumar P. He's the Chairman of the Board of Internal Audit Management Accounting, and a Vice Chairman C. Charanjot Singh Nandaji for his untiring efforts. And to the entire team of the Board of Internal Audit for their support, and the webcast team also. So once again, I make a huge thanks to the eminent speaker. Sir, would you like to speak anything?
Yeah, I would like to say that, first of all, I would like to thank the Chairman of the Internal Audit Standards Board, Vice Chairman and Secretary, Mrs. Aarti Bansal, and yourself, Mr. Agarwal, for coordinating very nicely. And I thank the Chairman and other people for giving me the opportunity to speak in this important webinar. I am very thankful to the technical team headed by Mr. Jay and other people for seamlessly going through the session without any hazards. So excellently it was done. And query also, lot of interaction from the people. Totally 86, nearly 90 queries are there. 88, 89 queries are there. Very good participation from the people. I would like to get the feedback. There is a feedback system later on. Thank you very much. Namaste to everyone. Bye.
Thank you so much. Sir. Thank you so much.